I'd love to get your take on just October to begin with, because the two big dynamics for the month were persistent inflation and obviously disappointing Q3 growth. And yet we had the best October in 6 years. Why?
Yeah. I think there are two forces that are keeping the market up. In spite of economic growth being sluggish, earnings growth has stayed up. In fact, I think between the middle of last year and the middle of this year, we had 14 months in a row where consensus estimates of earnings went up every single month. So it's almost like analysts are saying, you know what, the economy might be slowing, but earnings are coming back. The other force, of course, is what's kept this market afloat since the middle of last year, which is interest rates being at historic lows. And I think both those factors, I think, are potentially at risk, but those are the factors that are driving the market overall, but accelerating even more with tech stocks.
Yes. So where does that leave us now in the discussion? And obviously we'll find out hopefully more this afternoon, but about the rate trajectory going into the middle of next year. The market is famous, as you know, for expecting a slew of rate hikes and then not getting them.
Yeah, I think that, for the moment, we have another excuse for why inflation is as high as it is, which is supply chains. I think that excuse is going to work for another few months. And then at that point, if inflation still stays high, the question is, would you come up with a third excuse, or do you finally accept the fact that inflation is here to stay? That, I think, is going to be the moment of decision for the bond market. I mean, let's face it, the Fed in this case will actually have to reflect what the bond market does. If inflation stays high, I can't think of a way in which rates can stay at 1.6%. So I think that it's convenient that we started the year by saying COVID recovery is what's causing inflation. We're ending the year with supply chains being the culprit. When do we run out of excuses? I think inflation is a real and present danger, and I think the market has to come to terms with that.
So, Aswath, in terms of excuses, though, what do you think are going to be the real factors driving the tech sector in the next 6 months or a year? I mean, you mentioned the supply chain constraints, there are the chip issues, there's the, sort of the question of how the supply chain constraints are going to impact the ad-supported market. What are the issues you're watching beyond inflation and rate changes?
I think ultimately, if you look at what tech stocks are being priced on, it's the expectation that people will keep spending more and more money, not just in advertising, but in every aspect of what tech companies sell. The question is, if consumers are not making more money or inflation is eating away at their incomes, where are we going to come up with all of this money to keep spending? So I think that there is I mean, it doesn't mean that every tech stock is overvalued, but I think collectively that's a test for tech stocks, is there isn't enough money around for people to spend to keep all these tech stocks afloat. And I think that you're going to see corrections, maybe not of the overall market, but at least of individual stocks which don't measure up.
So, Aswath, speaking of valuations of tech stocks that are sky high, talk to us about Tesla and why you think it moved so much on that Hertz news, which did not impact the fundamentals of the company that much.
I think if you think about what the Hertz news was, which is 100,000 cars. I mean, Tesla right now is being priced as an automobile company that will sell more than 10 million, 15 million cars. I mean, that's what people are pricing in. 100,000 cars is not even a drop in the bucket. What I think people are reacting to is I think, a shift in the way people think about Tesla. Tesla started 10 years ago as a luxury automobile that people in LA bought as their second or third car and left in the garage most of the year. I think over the last 10 years, you got to give the company credit. It's moved into the mainstream. And when Hertz orders 100,000 cars, you've really arrived, because rental car companies don't buy cars that they don't think are practical. So the demand is there, and Hertz obviously thinks that there are enough stations around for you to charge your car. That is what I think people are reacting to, the recognition that Tesla is now potentially at least a mass market car. That if they can bring the price down, that people across the country can buy it rather than just in the coast.